Ladies and gentlemen, I would like to thank the Baltic Institute of Corporate Governance for inviting me to speak at your event, which I first attended when I was Prime Minister of Latvia around a decade ago. The Baltic Institute of Corporate Governance has always been at the forefront of transposing the best corporate governance practices to promote the transparency and competitiveness of Baltic companies. Its focus on helping companies to better manage sustainability-related matters goes hand in hand with the priorities of the European Commission. To quote our communication on the European Green Deal, sustainability should be further embedded into corporate governance framework, as many companies still focus too much on short-term financial performance compared to their long-term development and sustainability aspects. This makes today's discussion particularly relevant. It lies at the heart of transformational processes that the world economy is going through. The twin digital and green transitions are not only about a substantial rethinking of public finances and the massive investment needs of different areas of our economy. They are also about how companies conceive their strategies and run their day-to-day business. So, today's discussion will provide an important contribution to the necessary shift of mindset for the corporate sector in the Baltic states. While our immediate priority of protecting lives and incomes has not changed, the green transition remains high on the agenda too. Its urgency has become even greater as we rethink our economies in the post-crisis phase. We have unique opportunity to respond to the climate emergency as well as create growth and jobs for the recovery. However, it will take a great amount of funding and investment to meet the targets that the EU has set. To cut emissions by 55% by 2030 and to reach climate neutrality by 2050. This objective lies at the heart of the European Green Deal as we advance to sustainable economy. It will not be quick, easy or cheap. We estimate that it will take 350 billion euros in annual investment over the next decade to turn these ambitions into reality. This means investing in areas such as renewable energy generation, developing a hydrogen economy, electromobility infrastructure for cleaner transport, renovating buildings to make them more energy efficient. Shortly before the virus hit, we set a Sustainable Europe investment plan to generate more than 1 trillion euros over the next decade to turn Europe into the climate-neutral continent by 2050. Combining the Next Generation EU Recovery Programme with a reinforced long-term EU budget gives us a 1.82 trillion euros package, of which 30% of spending will support our climate objectives. To finance Next Generation EU, the Commission will issue up to 250 billion euros in green bonds between now and the end of 2026. This will make the EU the largest issuer of sustainable bonds on the financial markets. Then, each EU country using its main funding instrument, the Recovery and Resilience Facility, must allocate at least 37% of spending on the Green Deal. Put all together, this will provide a massive amount of funding for tackling climate change. But it will still not be enough. We need private investment to fill the gap. This is why sustainable finance is so important. Europe started to green its financial system some years before the pandemic struck. Since that time, I am pleased to see that the Baltic states have taken an active role in scaling up sustainable finance. The three Baltic countries have now issued around 1 billion euros in green bonds, following Lithuania's example with the region's first issue in 2018. During the crisis, we saw a significant rise of investor interest in environmental, social and governance issues. The strong demand for social bonds that the EU has been issuing under the SURE program is a good example. This is where EU's regulatory agenda comes into play, to stimulate more investment and capital flows into sustainable activities based on ESG criteria. We put rules in place on climate benchmarks and require ESG disclosures for benchmarks and indexes. We also have rules for financial advisors and providers of financial products to inform their clients on sustainability risks. These disclosures also include how investments affect environmental and social aspects, for example, investing in assets that might pollute water or harm biodiversity. We are also working on a new sustainable finance strategy to be presented this summer, building on our initial Sustainable Finance Action Plan from 2018. It will strengthen the foundations for sustainable investment. We will also propose rules for the EU Green Bond Standard and eco-label for green financial products. All this will make it easier for investors to invest in green activities and for companies to attract the rising demand. But first, we need a common language for green economic activities. Yesterday, the European Commission published the first taxonomy list of economic activities on climate change mitigation and adaptation. Companies also need to disclose information about their ESG activities so that investors know where to look. Rules on non-financial reporting already require large EU companies to disclose information on how they operate and manage ESG challenges. Also yesterday, we proposed new improved sustainability reporting rules for companies using common reporting standards to facilitate disclosures and comparability of information. While we need European standards, we will make sure that they build on and contribute to international ones as far as possible. We have also proposed a proportionate standard for smaller companies. This can also be used by companies that do not fall under the scope of the rules on a voluntary basis. However, this is not only about reporting ESG considerations, but also about embedding them into corporate governance. We are working on an initiative to allow companies to focus on creating long-term sustainable value, not just short-term benefits. It will help them to improve how they manage sustainability-related issues in their operations and value chains for social and human rights, climate change, and the environment. Thank you, and I wish you a very successful conference.